Financial Mutual Funds Fixed Income Outlook. In this short video, we would take a look at how different global and domestic factors behaved during the months gone by. This would be followed by our view on the domestic debt markets, which could in turn impact the positioning of our schemes. The growth outlook has turned out to be better than anticipated, with a reduced probability of recession in major advanced economies except the US, which has observed an increase in the probability of recession following the developments in the banking system. In addition, Global Consumer Confidence Index rose to the highest level since February 2022, indicating growing optimism amongst consumers related to economic growth. Major advanced economies are now experiencing receding inflationary environment, aided by aggressive rate hikes, easing supply-side pressures, and favorable base. On a sequential basis, however, the concerns for sticky and elevated inflation remains intact, with no clear sign of decline. Major central banks, such as the Fed, ECB, Bank of England, and Bank of Japan, expect inflation to cool down to the target levels only by 2025 or later. The US M2 money supply shrunk by 4.6% on a year-on-year basis. This and similar contractions since December 2022 suggest tight monetary conditions, which should support in curtailing inflationary pressures. This might also prompt the US Federal Reserve to tread with caution with respect to future rate actions. US Fed rate hike expectations for 2023, as per the CME FedWatch tool, have changed considerably. Markets now expect a pause in June 2023, followed by a possible hike of 25 basis points in July 2023. On the domestic front, the negative triggers for bond markets are possibility of higher than expected rate hikes in US, higher absolute supply in GSEC and STL, and relatively tighter liquidity conditions compared to previous year. On the other hand, the positive triggers are relative stability in INR on the back of improving trajectory in CAD, a likely prolonged pause by RBI in the foreseeable future, softer trajectory in commodities, and faster than anticipated slowdown in global growth. We believe the benchmark security could remain range-bound with a positive bias, given that 10-year GSEC has moved by almost 32 basis points in the last 2 months. Markets might be looking to add duration on every dip.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.